Alrighty, it's Doc from North America. Good morning, good afternoon, and good evening somewhere. And as usual, we are, watching the action to the markets. It seems like Tokyo has dealt with its issues, or let's put it this way: the Federal Reserve has helped them deal with their issues, just like it does with everybody else. This is what happens when the Federal Reserve now is the buyer of last resort. They make a deal. That's exactly what it comes down to. The Fed does know how the panic evolved, the last couple of days, and the pressure on the markets around the world. Not as much in the United States. I mean, the most we saw was a 3% drop. I think we did see a 4 or 5% drop at one point in the Magnificent Seven, and I think in other words in the Tech 100. And that was for them to liquidate assets, that have incredible. Matter of fact, what cracks me up is they're like, oh my goodness, look at look at Nevada. Oh, the world must be coming to an end in AI, that type of thing. And I think the stock started off at $20 a share at the begin, or maybe $30 a share at the beginning of the year, and now it's trading at 110. And because it came down from 140, it's like they would have to have a 75% drop in value before you could really start to cry that you only doubled your money. You know what I mean? You only doubled your money. We're down 75% now from the high. That's tripling the money. You've only tripled your money. It's like the whining and the crying, and it's like Apple. Apple was $155 stock, it got up to $240 a share, almost it was like a 80% increase, and now it's trading at 205. And so, it's still up, 38% or something like that. It's like, really, you're crying about being up 38% for the year? It's like, sell a call, buy a put when you get nervous. Stop being whiny. And so I guess the only big thing out of it all has been that Berkshire Hathaway backed out of a major position in the stock itself, but then it was riding the stock from incredibly... there it is. There's the tape. I didn't even look at that. Hey, Robin. Hey, Janos. Someone bought long VIX calls. Yeah, the 45s today. Expire on the 18th, paid $4 million. Yeah, they're just hedging themselves. 34,000 contracts. Hot damn. Yeah, I mean, you just don't know what the rest. You can't take that serious until you know what their portfolio is. I mean, they may have sold. Well, it was up there. They might have been selling premium galore in other things. So what they're doing is they're hedging. It's just it's possible it's a straddle or a hedge. You just don't know. Like I told you, I remember Paul Tudor Jones, the hedge fund manager. We used to do his execution. I think not me, but one of the guys in the office at our hedge fund, and it was like on the news it would be breaking. Paul Tudor Jones just bought 5,000 crude oil contracts. At the same time, I just got done understanding that at the same time, he had just got done buying something like 7,000 puts. But they only reported the buying of the 5,000 futures contracts. That's the problem with the media. Is that, they cheer what they want to cheer for whatever political reason they want to cheer it. So, that's... I see, Doc, could you comment on the daily buy signals on stocks versus the weekly? Okay, that's a very good, point of view. Let's use an example too. Let's go to, we were talking about Nevada. Let's go over to Nevada on the spreadsheet right there. We're going to highlight it right there. And as you can see, it's 3 weeks in a weekly sell, 2 days now in a daily buy. Okay. Now let's get it up on one of the screens around here. Let's see. Let's try this one right there. Open sesame. Go like that. And like that. Okay. And also at the same time, we can take a look at it on the beta. It'll be yesterday. It'll be the same as yesterday's. Matter of fact, there it is. It's Novardo on the beta at the moment. And you can see 2 days in a buy right there. And at the same time, we've been in a weekly sell since back on the 9th of July. So you go back and you look at the 9th of July. There's the 9th. That's the 11th of July. There is the 10th of July. So there's the 9th of July. So it went into a weekly sell that closing week. Okay. And you can see on, I guess it was like the 11th, they took it down. Where was the daily? The daily on the 11th was right there. See it right there? It was in a daily sell. It went into a daily sell on the 11th. And you can see it was in a daily sell for 7 days, maybe 8 days, and then went into a buy for a day, and then back into a sell for another 7 days, and then 8 days right to there. And then now it has been in a daily buy for the 5th and the 6th. And as we start, let's just show you on the other platform where it's trading at this moment in time. NVDA up again today. There it is right there for the 7th. So it's going to be a third day in a buy. You see the weekly is trying to turn up just like our weekly here. It's starting to move up and the lines are moving up and going through the manifolds, doing all the same things like the beta. All right, now when looking at the spreadsheet, and it says it's been in 3 weeks of a weekly sell, which it has been. So it was telling all the way back on like the 9th of July that there's pressure on the market on the downside. It's longer term money. So in other words, you have your, when a fund, let me digress. Let me tell you a story about execution. And Robin was pretty much the same way. Robin was doing execution in the S&P 500 pit, and British pound, and the euro and yen, and doing other stuff, lumber, doing a lot of physical execution. Okay, for customer orders. When I was young, well, actually no. I mean, when I was young, I did that. I did it on the equity side, and then in 1985 moved to the market maker side, and so I moved away from the retail and went that way. But in the hedge fund universe, okay, or fund management, what happens is that money managers are kicking the tires, and what that means is they're looking at stocks. Let's say it's a $2 billion fund, they probably have a position of about around 30 stocks, 30 different companies. Okay, and then let's see, where am I at? Okay, so and then what they have at the same time, they may have another 25 or 30 companies they're looking at that could replace their 30 stocks. And then what they do is they invest 2.5% in each one of them. And when a stock goes up to say 3 or 3.25%, they will sell a little of it to get it back down to the 2.5, and vice versa. If it goes down to 2 or 1 7/8, as long as their fundamentals say that they should still be buying the company, they will push it up to 2.5% again. Okay, so it's kind of like buy low, sell high. Unique idea. A lot of people have lost that perspective of financial markets. Buy low, sell high. Okay. So when a money manager, so what you see is the daily reflects a lot of that fluctuation. In other words, money managers coming in and something is down, like how we went into a daily buy 2 days ago in Nevada. Okay, on the panic day, no less. We went into a daily buy on the Novardo on a panic day. And as I've been now kind of relating the spreadsheet to the charts. Let's do this. Let's go like this. Let's make this. I didn't mean to do that. Leave Novardo there. Go to there. Move that up and go to the smaller size there so you can see both. So you can see the weekly right there. It's in a weekly sell. The pressure's on. The daily is telling us what the daily pressure is. just like when I'm over here and I'm looking at the intraday. I look at the daily and the weekly, but I'm also trading the intraday pressure of buying and selling. Okay? And that's what the daily does versus the weekly. It's showing you the longer term trend. So in other words, those weekly sells in Nevada tells you that the overall money has not been buying as much and the sellers have been dominating. Okay? And money managers go in and out. And so there's two reasons for them to be liquidating this particular product. One is, as I said at the beginning of the webinar, the thing is up enormous. I think it was like a $25 or $30 stock or $20 stock at the beginning of the year. The stock has gone up like, fivefold. So in other words, if you do not sell something you're making money in, then the next time you're selling it is when you're losing money in it a lot of times, And now in this case, it's going to be very hard to sell in a loss for investors who have been in this stock for over a year. Okay, Doc, could you comment on the daily buys? Oh, okay, I did that. Can we then go over and the same way on the other products? Most definitely. Most definitely. I'm going to take a bite of my apple. Hold on a second. There you go. All right, so what was that first one? The first one was Apple. Let's go take a look at Apple. There's Apple. Right there. 2 weeks in a weekly sell, 2 days in a daily buy. Did the same thing. Went into the buy on the panic deck. All right, now let's put it up on a screen. We'll put it up on the beta first. Right there. You see it went into the buy on that panic day. At the same time, it went into the weekly sell the week before. Now, I would say this about that. Money managers were liquidating. That's why our math has been picking it up on the weekly. Then, I mentioned it on Monday or Tuesday. I mentioned that many funds had a stop in the S&P 500 at 5,255. And so they were slowly liquidating down towards that on a mild way. And then there was the panic where when it got near the 255, money hit stops started selling at market prices, and everything got slammed down to 5,120. And that is really the next story of it all, is that the money managers that are trapped in the big giant $20 trillion swap in Japan needed cash to compensate. That's why the stock market over there dropped 12% when ours only dropped 3%. So that tells you, and Europe was the same way. Europe really wasn't down that much. And so yeah, that's exactly the same thing going on. Money managers, when their portfolio, in their portfolio, not when their portfolio, in their portfolio, when they dip and they still believe in that stock, they will buy more. In other words, money managers don't go, okay, I think I'm going to own 20% of Nevada and then the rest in 30 stocks or 29 stocks. They don't do that. They usually balance it 2.5%, 2.5%. They do it across because they're trying to treat it like an engine. When one thing is going up, another thing is possibly going down. But the engine itself is all, the crankshaft itself is going in the same direction all the time. And so there is Apple. And this morning, let's look at it on the regular platform, showing it to you where it's live. File, open, Sesame. Here we are. Let's see. So why do they get paid so much money? Because most money is stupid. It is easy. It's not hard to be a money manager. I told you that like 8, 9 years ago. That's what I said to you. Become a money manager. Let's see. Let's go to, there's the apple. Can you see that? Let's see if you can see that. Let's make you see that. We will allow you to see that. There it is right there. It's trying to lift up again today. Doing the same thing. You can see the weekly for the last couple of weeks. This is the 3rd week now. So money managers needed cash to balance out their portfolios so they could buy. That's why there's a rotation going on. Look, there's a, was it possibly Google, Meta, the Magnificent Seven, even Tesla. They're all way higher than the beginning of the year. So, I mean, you don't sell things you're losing money in. You sell things that you're making money in so you can offset it with things you're losing money in. If you don't sell the things that are making money, you can't offset the losses. So it's it's that constant dance. So let's see. Must be why I failed the interview that time. I said this is easy. You are a bunch of dummies. Yeah, that'll definitely push you out the door. I had failed due to saying my mind. Yeah, don't tell them your mind. You got to talk. You notice when I do my hedge fund talk versus my trader talk, you're talking like a trader most of the time. You got to talk like a hedge fund, like, well, the market seems to be leaky this week. Not, it's excuse me. Not like, it's going down like a meteor from sky. You can't say that. You got to be conciliatory, soft. And it is leaking like a rowboat. It's not dramatic. It's just relaxed at the moment. It's sneaking up on us. In other words, you got to deny reality. As a fund manager, you got to talk like as if reality, like you're on lithium or something like that. You're on some type of drug that keeps you chill. You act like the Vice President of the United States, like Harris. You giggle a lot, Hedge fund talk. It appears that the economic situation has been unfavorable to our differentiated equity distribution. Yes, exactly. That's it. Now you're doing it. That's exactly it. It's got to be, the glass has to be half full and half empty at the same time. You can't say to them, that damn glass is empty. Fill it up. It's got to be, I can't tell if it's half full or half empty. It looks very close. And leave the word close and don't tell them which close of what. Full or empty. You got to be, it's like, that's why I dumped my hedge fund. I couldn't handle dealing with that rubbish. It was like I was up 26% and I was like, oh God, let's just close the thing. It's like, I don't want to talk like that. So, that's the way that universe is. And so, and they're very cutthroat at the time. Don't think they're like pussycats. They're not pussycats. They just talk that way for the clientele who's regal, loaded with capital. Or in the hedge fund, well-heeled. That's what it is. They're well-heeled. Or they obviously have enough resources. Or they're very robust. That's how you say they got a bucket load of money. Let's see. I need to find that anecdotal about politicians being asked what is 2 + 2. Yeah, right. Exactly. Yeah, exactly. And so, yeah, it's that's the universe there. So I remember my fund, was like, I remember at the time it was like 2005 or 2006, something like 2005, I think it was. And so it was like, it was started at the beginning of 2005 going into from 2004. It took a while to get it organized for like 6 months. And then, did that year. And what was my point there? I had a point there that it fits what you're saying there. Uh, shoot, I'm having a seniors moment, and so it. I know what it was. So there were 7,000 hedge funds at the time, and out of the 7,000 hedge funds, I fit into a category of 3. That was it. The rest of them were they hedge risk. That was all they do. They say they hedge risk, and then they in their incorporation manifesto made them long. Most of them were longs. I think there was maybe a couple dozen that were short funds, but over 6,000 of them were long funds. That's all they did. They were longs, but they claimed that they hedged their portfolio when necessary. Sold calls or sold futures or stuff like that. But overall, when it came to the actual option trading / long short fund, there were only 3 other competitors out of the 7,000. That was it. That was it. And it was like, why am I wasting my time? I have the same amount of money. Why do I need somebody else's money? It was like, this makes no sense. Why do I have to act like a gentleman all day long? It's like, no. So, handing back the investors the money, they were like, why are you doing that? It's like, I'm just trading for myself. So yeah, that's what it comes down to. It's it's incredibly polite, incredibly you're descriptive, but it's very vanilla being descriptive of what's going on. And you just. But believe me, the managers themselves are a bunch of cutthroats. They will take any advantage they can get at any time. But when it comes to being in front of the clients, they act like as if they are Mother Teresa. I see. Another question that will the YouTube algo censorship. Oh yeah, and that neat. Any opinion on that? And Israel, Iran. Well, Iran. Look, the community over there. I'll say it in hedge fund language. The let's say Iran is very blustery, and they always are, and they're financing a lot of I guess you could say rebel organizations. I call them terrorists, but they refer to them as rebel organizations, and they use civilians as cannon fodder, in other words, as human shields, and so they they'll be blustery. They know that the old adage "one shot once" is pretty much dangerous. They already tried it once. They fired, where their heads were at. Shows you the level of management skills over there. Who's leading the country at the moment. Not that there isn't smart Iranians. It's just they're obviously not the ones running the country. It's the thugs who are running the country. So they fire things from Iran. Takes them like 3 and 4 hours to get here. And the Western Alliance or the American Alliance of Arab states and I guess you could say Sunni Arab states and Israel and some Western European countries basically was a turkey shoot. They just knocked them all down. Even if they all they all didn't make it there to begin with, so it was like a turkey shoot. They were just knocking them all down. They're trying to figure out how they can attack and succeed. In other words, they want to level like 3 skyscrapers in Jerusalem and 3 skyscrapers in Tel Aviv and 3 skyscrapers in Haifa. They want to punish Israel for killing their rebel adversary, rebel leadership. The what we would call terrorists. So they're gonna do their best. I guess oil is a good example. In the very beginning, oil shot up to about 82, and then fell all the way back down. Yesterday down to 72. Let's put that up on the screen. There's oil. yeah, on Monday, oil got down to 71. Was that 87? 87, yeah. 67. Last 2 days they've tried to lift it up. This was the attitude, right here. It was in the 74ish area, and it jumped all the way up to the 78ish area. So they were concerned, and then they started realizing that Iran is more talk than action, and they've already done it. They've already attacked from Iran, and now Iran wants to know why Israel would attack them in their own country. It just shows you the level of the intellect running the country. It's like, well, if you put your hand in the mouth of an alligator, don't you think there's a chance that it would bite you? And the Iranian leader says, no, of course not. Why would it bite me? I'm with God. And that's pretty much where their heads are at. They believe that they're right and that things will protect them. And so they tried it. It didn't work. And you noticed Israel, again, took out another 4 leaders last night, I guess it is, yesterday afternoon. And, Iran still hasn't. I saw this article and by Iran's leadership and said why we haven't attacked yet and why we're waiting. But the first words out of their mouth were, we're going to make them pay. We're going to take care of them. They will bleed, And then here we are 5 days or 7 days later, and nothing's happened. And the Israelis just keep on taking out targets. And because Iran really doesn't have that much capacity to handle pain. That's what it comes down to. They just don't have the capacity to handle the pain. And so they've had proxies doing all their work for them. And now that the Israelis are killing the proxies, Iran tried to attack from Iran and found out that they are not anywhere near capable. Matter of fact, I found it really odd. The S-300s from Russia, why aren't they giving them the S-400s? I don't understand it. So Iran is not only are they getting a missile defense system, but it's a little bit older and a little less functional than the S-400s. Now, the Israelis seem to be able to deal with both. They're just one's a little bit harder to work against, I guess. But Iran doesn't realize how much God is protecting them. Because if the Israelis were as savage as the Iranians, then a third of Iran would be in flames right now. Instead, they just take out leadership. The evil or let's put it this way, in hedge fund terms, they take out their very robust management. Let's see. Another question. This will hit YouTube. Oh, the censorship. Any opinion on it? Oh, I didn't do the censorship one. Well, the censorship one we've known has been going on, and there's serious talk about, in other words, there was a congressional investigation on it about a week ago, and they released the report 3 days ago, and it showed, how they it goes under the category of antitrust. In other words, it's a monopoly. So in other words, the corporation that's making that decision has turned into a monopoly. And since, it controls X amount, then you can sue it. And that's what they're doing now, is they're starting to sue it. And let me tell you the numbers. What are the numbers? I'm trying to think if it's right. Okay. Before Elon Musk bought Twitter, they were getting about $1 billion. I'm not sure if it's a month or a quarter in advertisement fees. Okay. And now that Elon Musk owns it, they're getting 150 million instead of that billion every quarter or every month, whatever it is. And so that's why Elon Musk, laid off 15,000 workers at Twitter. So it's obviously a monopoly, Congress has identified it as a monopoly, and so now they have grounds to sue. And so that's pretty much the answer to that. I hope that answered your question. I answered both of those pretty well in a hedge fund way. And Iran should be very happy. They are being protected from God, by God, because if it wasn't, the Israelis would have leveled that place and made it so two stones can't be rubbed together. But God has made the Israelis civilized people, so they don't use civilians to kill. They only end up killing civilians when they are used as human shields. And even then they do their best not to kill them. So, the Ayatollah is definitely right. He's being protected by God because God has made Israelis civilized human beings. And so they are not the savages that the Iranians are. So that's pretty much the answer to it all. And that's a good thing. Maybe the Ayatollah will learn. Maybe they will become closer and understand more appreciate civility even more, realizing that they are being protected. But when they put their hand in the mouth of the alligator, sooner or later it is going to bite you. And I guess that's one thing they never believed could happen is, that the alligator would bite them. All right, where do we leave off from there? I guess what we do is we jump over to, what was the other products you wanted to see too? There was, you wanted to see a couple of other products. Where is it at? There it is. So there's Apple. Let's look at Google. Google, here it is. Google is 2 weeks in a sell, 2 days in a buy. Let's see how it's acting this morning. Right. Whoop. Messed that one up. What did I do to that? I don't know what I did, but let's get rid of that. Yeah. Are you sure you want to... Let's do this. Let's go to the windows. Okay, yeah, I must have created another window of something. What is that called? Position track. Okay, here is Google. Right there. And you can see Google is higher today than yesterday. So, if they get hit, it's not going to make a decision. Let's put it this way. They will not make a decision in the next 24 hours. And Google has already been sold down from what? The 180 area? Let's take a look at Google. Where did it start the year? I thought it was in the 120s or something like that, where it started the year. Yeah, there is February. There's January. Google was a $140 stock, basically, at the beginning of January. And it's going to 180. So that, that's not that bad. That's a nice, what's that? 20% move? Pretty good for the year. And now it's still trading at what? 161. And it was at 140. So you're talking about a 12% now? 10%? I guess 10% would be $10. 12%. I guess it's like about 14% versus 25%. Not bad. They're taking profits, but it's not down for the year. You can see we're still with no problem in the minus when it comes to the weekly there. Let's take a look at it on the beta. And you should sign up for the beta. It's for free until we start charging for it. And there's always a deal to be made. You can see it there. There's 3 weeks in a sell, just like the other chart. And you can see it's 2 days in a buy. And then when it starts trading today, we're going to see it plus. So... boom. And then what was the next one? Meta, right? Meta, Meta was curious. It jumped into the buy yesterday, right there. It's higher today. It's also that's 5 weeks. Is it 5 weeks? Let's put it up on the chart. Go to the spreadsheet there. Meta was 4 weeks. It's in its fourth week now. Meta. Whoa, what is this? No, I didn't mean to move you over. There we go. Right there. There's Meta. So we are 3 weeks in a sell. This is the fourth week. And at the same time, they are going off the V bottom. Because, see, the Federal Reserve knew what was going on, because they clear. It's like a bank not knowing their depositors moving in and out, Before I doubt that turn into anything about another Israeli intervention into Lebanon. That's where they hit yesterday. I think they hit Lebanon again. Another 4 leaders got taken out. I think Israel's going to go clean up Lebanon. I think remember Lebanon is in a very tough situation. Hyperinflation. Hezbollah is in the prime minister position, the defense minister position. The army of Hezbollah is bigger than the Lebanese army. They have 150,000 projectiles, I guess you could call them, rockets and drones and so forth. Hezbollah, is the country is a terrorist nation now. And so, the Lebanese don't have much of a decision but to sit back and watch and let the Israelis do their thing. So, they'll whine and say, when you hear like Lebanon says, "Oh my God, we're being attacked by the evil state of Israel," that's Hezbollah saying that because the prime minister is Hezbollah. I think the president now is also Hezbollah, and I know the defense minister is Hezbollah, and the speaker of the parliament is Hezbollah. So I mean, they're pretty much a terrorist nation. So the Lebanese will sit back and watch. The Lebanese army will sit there and say, "Not our job. Clean up the mess. Go ahead, Israel, clean up the mess." Let's see. I doubt it will turn. Let's see. But can all of this impact the markets as some say? Yeah, I guess if it escalated, if it became much more brutal. I know I tend to get. Let's see. Yeah, I know I tend to get the beta. Good. But damn, with the changes in the office and all that, I have had no time. There is something that I can say only during a visit, personal stuff. Right, I hear you. It takes time. Exactly. So, basically, I don't, the markets are not really reflecting it. As you can see, the oil, I mean, when you look at the international products themselves, right there, Gold's kind of sideways, going nowhere. Oil, same thing. Silver's been interesting. Is that, like usual, silver becomes that, the weak link in the chain. I mean, it's down into the 27s now. They can't even hold the $30 area. 26 seems to be a strong area now. You can see here. I thought was interesting yesterday was the 30-year bond sold off yesterday. You can see it right there. Went into a sell. Today it's down a little bit more. That means interest rate, when the bond goes down in price, interest rates are rising. So, the nervousness, you can see it here. They knew something was going on the last couple of days. We were in a weekly buy. We've been in a weekly buy all the way out to here back in May. Almost at the end of end of April, beginning of May, we went into a weekly buy. The product went from 115 basically up to 126. So the price of the bond jumped from 115 to 126. That's pretty hot and heavy. And so that means, when the price of the bond goes up, interest rates are dropping. So they've been running to safety because there's a good return on it, And then you can see the daily turned up in here. I think it was that day right there. It went into the buy and kept on climbing. I don't think it dipped underneath the zero line. That's why it was just still in a buy. And then finally it went into the sell after the spiking. There was a spike on Friday, which is kind of interesting. So they spiked it on Friday, and there is today, yesterday, and Monday. And so they, as the panic was exploding on Monday, they were taking bond prices down again, meaning interest rates were rising. Well, everybody was crying and screaming and begging for the Fed to come out and do a half a point or a three-quarter point that day. Talk about market managers sound like drug addicts, honestly. The way they cry and scream for the Fed to do something when historically interest rates are just a little bit higher than normal historically now. The mathematical mean of U.S. bonds for like the last 200 years is like 3.5%. So in other words, we had the Jimmy Carter inflation explosion, which ran all the way up to, almost 21%. Then Ronald Reagan came into office. It was at 21% or 20.5% or something like that. And now, it's gone all the way down to zero, especially after quantitative easing. It was in the threes, and once quantitative easing came along, they drove it into zero because of all the bankruptcies like Merrill Lynch and, Bear Stearns and Lloyd's of London and, Bank of Scotland, RSBC, and HSBC, and Barclays, and there's a lot of bankruptcies out there that are still pretending that they exist when in fact they're owned by central banks, or they're propped up on some level by other companies. The way Merrill Lynch is now owned by Bank of America, that type of thing. So they made these marriages. And they paid like $1 a share or something like that, or $6 a share, and they took over all the risk, and the Fed lent them the money, and it's like they financed it for them. So, and then they took on some debt of their own, but they gave them nice cheap money, the Fed, to marry these things. Like Bear Stearns, the Fed gave J.P. Morgan Bear Stearns, and they paid some ridiculous number like $4 a share or $8 a share or something like that. It was like a $200 stock. And at the same time, they gave them the real estate too. Afterwards they were like, well, that building's being built in the most prime property in Wall Street, and who owns it? Will the builder own it, or will J.P. Morgan own it? Because Bear Stearns was out of business. And the Federal Reserve gave them a $1 billion building at the time. It's probably like a $3 billion building now, for free. They just gave them the building. Keep the building too. It's they whine like drug addicts. Honestly, they're like hooked on no interest. They want free money all the time. It's like these money managers are just putrid that way. So when you go sit down and interview at a fund, you got to talk like you're in La La Land also. You just have to show them that you have knowledge of La La Land. You don't have to show them that you believe in La La Land. You just have to let them know that you understand La La Land and you'd like to live in La La Land with them. Let's see, but you can impact the markets. Let's see, yeah, I know. It takes time. As I read the Bank of America takeover, Merrill Lynch was an ego thing. Oh, well, they always wanted to merge with them. That's why they did it. The CEO of Bank of America just wanted to be with the big boy traders. Yeah. South Carolina, look, Bank of America is not the Bank of America of 50 years ago. Bank of America is a Carolina bank. Remember, Bank of America was a San Francisco bank. They got bought out. And so, basically, Wachovia and the ones that own Bank of America, there were two competing companies in North Carolina. And they were in Durham or something like that. And they were growing, and they were smart. And they were buying banks around the country, and they became in the top 5. And then Bank of America was basically an old bank with a big name, and they bought Bank of America and dropped their North Carolina name and took up the name of Bank of America. And so, the Carolinians wanted to own Merrill Lynch. They wanted a big brokerage house. And then, Merrill Lynch went bankrupt. And so the Federal Reserve said, go bankrupt or sell to Bank of America. And they said, okay, we'll sell to Bank of America, which protected all the bondholders at Merrill Lynch. And so the stockholders got their heads handed to them. Their preferred stock was half and half. They got their heads handed to them, but they let's put it this way, the stockholders lost 95% of their money. The bondholders kept all their money. And because Bank of America took that responsibility. And then the preferred stockholders lost maybe like 40 or 50% of their money, or 60%, something like that, So, and that's what it was it's not the Bank of America of San Francisco, that was around forever. It's a North Carolina bank now. That's where they're headquartered too. They're headquartered in North Carolina. And they took the name over. It was a better name. Wachovia did the same thing. Wachovia, I forget what their North Carolina name was, but they kept on buying things and kept on getting a bad reputation at the same time. So they had to keep on buying things to get rid of the bad reputation. Now they got merged with Wells Fargo because Wells Fargo did not get clipped in the disaster. There was a half a dozen major companies that did not get clipped, like J.P. Morgan, Goldman Sachs, Berkshire Hathaway. Trying to think who else out there. Charles Schwab. Pretty much most of the rest of the brokerage houses are gone now. They're all gone. They all went under. What they did is they did the what did they do? How they went bankrupt? What they did is they did the CDOs, the collateralized debt obligations, and not only did they buy them, they leveraged them 7-to-1, 8-to-1, 9-to-1, something like that, because they were totally convinced, because they're Democrats, and they were totally convinced that it would work. You could leverage risk at a high rate, and so what happened was, and the same thing at the Lloyd's of London, their Labour Party types. Say, oh yeah, let's just leverage our asses off. Let's just buy until we have no more margin left. Just buy all of it, and we're going to be getting great returns. And sure enough, they all went bankrupt. Bear Stearns, same way. Most people don't realize most of the brokerage industry are liberals. They're salespeople now. The traders sold out 3, 4, 5, almost 5 decades ago. The actual traders who went off and became hedge funds. That's why the hedge fund industry now is so big. Is that the brokerage houses left the brokerage business and turned it over to salespeople. So there are just a bunch of salespeople in most of the brokerage houses. So, and that's what happened. And if they survived the 2009, the 2008-9 situation. Because it happened right as Obama got elected. It was like 2 weeks before he got elected. It all melted down. He was big in the polls. It looked like he was going to win big, and it all fell apart. The economy fell apart. The CDOs were a bad investment to begin with, but the government condoned it. There's videos of George Bush warning everybody in 2005 and 2006 and 2007 that the Democrat Congress is destroying the economy. And they did. And now we have quantitative easing run by the Federal Reserve. So, let's see. Any other questions? BOA. Sorry, Doc, that won't happen each time I talk with them. I am too passive and aggressive. You need to learn to use the word robust. And instead of saying it's losing its ass, you have to say, it looks kind of leaky today. That's what you need to do. In non-official meeting terms, into a brawl. But they are okay compared to pension funds. Hey, pension funds. Hey, those guys, they'll say anything because they're trying to get the unions. The unions have control over the money, so they'll tell them that they think that Stalin and Stalin could have been brilliant if he only had computers. They say stuff like that over in the pension fund area because they're talking to the union guys. Union guys want to hear socialism. They don't want to hear capitalism. They just want the return of capitalism. That's all. Took another bite of my apple. All right. Did we get all the stocks you were asking for? We did Meta. Let's see. Where is the other stock? Oh, Tesla. There's the last one. Let's look at Tesla. There's Tesla. It's on the second week of a sell. Came in a sell. And it's 1 day in a daily buy. Let's put it up on the beta. Oh, you know what? Let's put it up on over here. There it is right there. It's going on a second day in a buy. It's a little bit higher than yesterday. It went into the sell on Friday, or maybe even lower, but either way, it was last week. So it was anticipating, and it was in a daily sell too. And so it just showed you the leaking, the daily and the weekly showed you in all these stocks that there was leaking going on. There was money managers were taking profits. They were liquidating, and they got to a point where the math said the trend is now down. And that's pretty much what it comes down to. All right. What kind of title do we come up with today? How about Hedge Fund Talk? Robust or mean? How about something like that? Good. Yeah, apples. I was out in the pasture, in the meadow, looking at the plants and working on the plants before the webinar. So, I thought I should eat something more than chewing on some vegetables I chewed on out there. I should have something else. Anyhow, I think I'm going to make the title today Hedge Fund Talk. Good or bad? How's that? That sounds. Maybe that sounds like a fun thing. So we'll do that. All right, traders. What else we got? Anybody want to see anything else? I can do a quick run on all the currencies and so forth, and give everybody a flavor of that. But let me punch that in first, so I don't forget it. I have kitty cat Alzheimer's once in a while. I'm an old man heading for 70 years old. So I got kitty cat Alzheimer's. I have senior moments. Senorita. Let's see. Go like that. Go like that. And go like that. There we go. Title. How about language? Language. There we go. Hedge fund language, good or bad? That's the... Okay, now, let's do a quick run. Let's do a quick run through everybody really quick so anybody watching the video will be able to see what was happening. And so let's go over to here. And you got the S&P 500 futures contract trying to get into the buy still. Still in a weekly sell for 3 weeks and so forth. You got copper kind of rolling over again, still in sells on days and weeks. Silver, same thing, rolling. Gold flirting with a weekly sell and 4 days in a sell. Natural gas lifting its little head up, isn't that cute? But it's still in a weekly sell for about 8 weeks now. Let's see, we showed you the bond market. Platinum, 5 days in a sell and 4 weeks in a sell. Heating oil, trying to get into the daily buy today. We got a green and a red. Maybe maybe it's a seasonal thing, and it's 4 full weeks in a sell. Oh, I don't know if that's true though. That's the problem. Remember, the hedge fund guys are smart. There's a lot more traders over in the hedge fund world than there is anywhere else. But if you think that would be the better title, change it. It's fine with me. Crude, trying to lift up, but still 4 weeks in a sell. And then we dance our way over to the currencies. Mr. and Mrs. Euro, looking a little weak this morning, but it's, a good solid 5 weeks in a buy. Cable, got that revolution going on. Knives and sticks and bats and so forth. Playing with the weekly sell, and it's like, 3 weeks in a daily. Sell. The inflation fighters, giving it up a little bit today, but look at it, went almost down to 84, so how can you complain? We've been in that weekly sell now for, what's the spreadsheet say? I don't want to count it. Spreadsheet says 10 weeks in a sell. And the Yenski, you didn't know it was part Polish, did you? Yeah, the Yenski is, what do we got here? We got it going into a daily buy, so that long drive down seems to have stopped on that panic day. 4 weeks in a sell at the same time. The Great Experiment, oh baby, made another all-time high today. The Great Experiment. One day, former Prime Minister President Erdogan will have to explain to us what his strategy is, because what is that? That thing's sitting in like 13 weeks in a weekly buy. Keeps on making all-time high. How about South Africa? You can see the Commonwealth down there is gaining a little bit against the dollar the last few days. You would think there'd be a little bit more strength in the gold and the silver. And you can see we are 4 weeks. Let's make that weekly and move it over. And we are 4 weeks in a weekly buy. 3 weeks. I'm sorry, 3 weeks in a weekly buy. So that is it, traders. We're out of here. So you're welcome to change the title if you think that's the better one. But I'm not sure. I'm not too comfortable with thinking that the hedge fund guys lost it. You got to figure that our math was picking up their selling. So they probably were selling. And who do you think was buying on the panic day? I'd say it was the hedge funds. Yeah, I would think it was the hedge funds doing it. Because look, the math is picking it up. Okay, cool. All right, traders, we're out of here. This is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our Dukascopy friends. Later, traders. Arrivederci.